Good afternoon, everyone, and welcome to Stock Market Today. It's Ali, Coram, and Ken Shreve here with a breakdown of the action in today's session, Thursday, August 17th. And breakdown might be an appropriate word here, Ken. The market pullback is worsening, and today was a pretty ugly day.
Yeah, I think at the Nasdaq's low today, it had fallen close to 8% off its recent high. So we get into these intermediate term corrections when you get a 10% pullback, and then, a full-blown bear market when you get to a 20% correction or more. So listen, it's a third straight session for the Nasdaq where early gains faded and it closed near lows. So that's hallmark action, and when the market uptrend is under pressure like it is. So the market went after stocks that had been holding their 50-day lines today, so it's kind of just picking off all the last remaining stocks out there, it seems. So home builders under pressure today. Meritage Homes, we'll take a look at that. MTH, also Meta Platforms, which had been showing strength, it lost support today. And Li Auto, a China stock left standing, still holding above its 50-day line.
All right, we'll get to those stocks, but first, let's take a look at those major indexes, if we dare. The Nasdaq down 1.2% by session's close, followed by the Russell 2000 down about 1.1% today. The Dow and the S&P 500 both down roughly 0.8% each. So we were saying when this pullback started, even though we did get a pickup in those distribution days, it was looking like an orderly pullback until this week. It definitely is feeling like we're starting to see more selling, more volume, really weak closes, and notable percentage declines on the day.
Yeah, and volume was so heavy in the Nasdaq yesterday. It was going to be a very difficult volume comparison. So I guess cold comfort today is that the Nasdaq avoided a distribution day. But listen, we've had 9 higher volume declines since the second half of July, and we were looking at that late June low for the Nasdaq.
Yeah.
I think it was that June 26 low, and we undercut that by a little bit. Like I said, the Nasdaq now close to 8% off its high, and you have to think that with the trend now, a test of that 13,000 level, could be in the cards.
It definitely could be, Ken. I know you were saying recently that perhaps a potential silver lining is that we're getting to oversold areas. Of course, we can always get more oversold. Bullishness has been coming down, but in general, in terms of sentiment out there and how we factor that into what we're seeing on the charts here, what should we make of that aspect?
Well, it's market is clearly oversold. We mentioned we've been saying in recent days that short-term oscillator is approaching lows last seen in March, and that was when the market put in a very nice bottom. So well, you can see, yeah, it's just a good visual there. So we're getting near that. We're getting near that low. Really, the real issue here is just all of the damage in leading stocks that we follow. I mean, we lowered our exposure after yesterday down to about 55% on leaderboard. We had been raising some cash before that, and we raised even more cash today because we just saw very bad action. A lot of the declines, at least in the leaderboard model portfolio, were in pretty light volume, but still these large percentage gains that you were talking about. A name like Martin Marietta, MLM, had been just really trading tightly above its 50-day moving average. Pretty bad break today, barely holding that recent low of 431.21. And you can see volume was only average. It was higher than the prior session, but yeah, just seeing a lot of breaks of support like this, which is not. It just makes the market even more difficult, and even more reason to raise cash and just kind of get out of the market's way here.
Right, because sometimes sharp breaks of the 10-week line can just lead to a base building period, but other times they can lead to the mark of an end of a run. So it's
That's
definitely
true.
a signal we want to be paying attention to. We'll hope for the best. Maybe we'll just see a lot of bases being built after a very strong first half, but we've got to be prepared for a continuation of the
I mean,
weakness.
yeah, when you get a market pullback, maybe that's market comes in 10% off its high. It's typical for growth stocks to form bases and pull back, 20 to 25%, more than twice what the market does. You get a more meaningful pullback of 20%, then you see your growth stocks showing pullbacks of 35, 40%, if not more on the left side. So, we're not even at an intermediate term correction here. Like I said, the decline is less than 10% off the high. But yeah, the price action has just been terrible. We've talked about the rising bond yields. That has been a big headwind for the market, and also the U.S. dollar has just been rising right along with these bond yields. I think the closing price for the 10-year yield today, maybe around 4.31%. It's going to be the highest since 2008. So just notable notable action here, and you have to wonder, people are selling bonds, and why are rates going up? Maybe is the market maybe coming around to the idea that inflation is going to be sticky, and the Fed is going to have to follow through with maybe more rate hikes than what the market is expecting right now. So there's just a lot of headwinds out there, and again, raising cash is what you should be doing now.
Right. And while it's not fun, it shouldn't be a surprise for investors who really have been staying in step with the market action each and every day with us on this show, every morning on IBD Live, on our podcast. We're talking about these things, about the market signals, about how rising rates would not be great for stocks. So we'll continue to keep track of these developments. A couple of quick things to take a look at before those stocks, and that is a look at XLE here. It did manage to be up on the day, up about 1.2% off highs though. But is this the standout group to you right now, Ken?
I would say so, because we've been talking about the selling in the technology sector, and then we were seeing some home builders that were still holding up. We were seeing select retail names that were holding up, and certainly, and here's the home building group. You can see the selling in that group today.
Retail,
Yeah,
XRT,
XRT,
kind of coming off. Yep.
that is kind of, broke through the 50-day moving average today, is now testing its 200-day moving average. So, and you look at a name like Costco, a name like Costco that had been, holding up pretty well here, still, barely clinging to that 50-day moving average, but it fell below that 551 low. So, that one, still holding support, but looks like it could be on the ropes here, higher volume than yesterday. So you can look in the energy patch at this point, but again, that XLE, it got knocked lower with all other stocks. Managed a gain of 1.2%, but finished near a session low.
Right. Well, speaking of the home builders, let's take a look at MTH here, Ken, because this is just yet another example of a stock that has been performing well all year long, really since the market's October lows. And today, a slice below that 50-day line, a close at the lows, volume roughly average, but definitely picking up versus recent sessions.
Yeah, I mean, and even though volume over the past four declines, say it was below average, but higher than the prior session. So seeing some mild distribution start to arise in Meritage homes, and there's a saying that a weak market is eventually going to take everything down with it, and it kind of feels like we're near that point right now. We mentioned the areas of the market that had been holding up pretty well, but a lot of the home builders and retailers broke today. Maybe just look at a name like we looked at in yesterday's video, Chart Industries, GTLS. Let's see how that fared today, because it had been making see, that's the energy, still fighting a good fight here. We talked about this one yesterday, finding support at the 10-week line, and to me, support is still in question here. You typically like to see a bounce off a support level, so seems like the energy stocks are still hanging in there, but I'll tell you that I don't know what else besides that to really look at this point.
Yeah. Well, we could look at things that don't look good or as good as they did. And Meta, another example, it hadn't even touched its 50-day line this whole move this year. This has been one of the strong and steady leaders of the year, Ken, but a slow drip, 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 and an acceleration of the losses now, with Meta now below its 10-week moving average. This weekly chart, I feel like, definitely paints a picture, not trying to be all doom and gloom, but this is a character change. And again, at best, maybe it forms a base here, but we can't ignore a signal like this.
Exactly. And you mentioned, when a stock falls more than 2% below its 10-week moving average, where's Meta right now in relation to its 10-week line? It's
4%, 4.1%.
4.1% below the 10-week line. So we do have a lot of research that shows when a leading stock, marks its first close below its 10-week line of more than 2%, like a Meta, it's very likely that this stock is going to go, form a base and consolidate further. So if this is an example, if the market continues to weaken, Meta Platforms is going to build the left side of this base. Maybe the pullback is only 20, 25, 30% off its high, but that is still a sell signal so far this week, with the stock so far below its 10-week line. You can see volume over the past 3 weeks has gotten lighter and lighter and lighter. So it's not clear to me that institutions are entirely dumping this stock right now, but it's 4% below the 10-week line, and we'll see what tomorrow brings, because again, we are looking at a very, very oversold Nasdaq here. Maybe we expected a bounce today with Nasdaq 100 futures up 0.5% in pre-market trading, but those gains, quickly dissolved.
Yeah. We'll have to see. And last but not least, let's take a look at Li Auto. We can stay on the weekly chart for the moment, holding above that round number at 40, which, if we go back, draw a line, does seem like a significant level for this China EV stock, finding support above the 10-week for now.
Yeah, I mean, it was a pretty harsh distribution week, 2 weeks ago when the stock reversed off its high in heavy volume. So that sharp down week was a distribution week. It's trying to rally back this week, not making a whole lot of ground so far, and volume is still relatively light. So I think very few China names that I'm following these days, but I think Li Auto, the EV maker, with the growth prospects and the way the stock is trading, there could be this still has the potential to be a stock market leader. But like I said, a weak market is eventually going to take everything down with it. So even though Li Auto is holding support at its 10-week line, even stocks showing technical strength are very risky buys in this market.
Mm-hmm. All right. Well, we'll take things one day at a time and proceed accordingly. Thanks so much, Ken. Thanks for everyone also for tuning in. We will be back with more tomorrow morning on IBD Live, and we hope you join us. Investors.com/IBD Live for all the details there. We will be joined by Leif Srede, a former U.S. investing champ, and he's been on the IBD podcast a couple of times. He's a fan of the show too, so it'll be great to have him on and see what he's taking a look at out there. So we'll see you tomorrow morning, and we'll also see you right back here at the close.